Hey traders, it's Christopher Mullen from thetechnicaltraders.com with another exclusive FXEmpire video market analysis. Now, I got some pretty interesting data here, which is going to probably go against your gut thinking because the masses are really moving in one direction. Everyone is super bullish on equities, and I get it, the trend is up. But this could be a very significant turning point over the next 3 to 5 trading sessions. So let me show you this big data, these key points here that the market is screaming at me right now. Now, if we look at the SP 500, this is the futures chart, the daily chart. You can see D up here for daily. And more or less, I got this line in the sand. I talked about this high, this bounce high, being very significant. Back when the market was trying to put in a bottom, I said it may want to get all the way up and test or pierce this high to get everyone super bullish. And we ended up playing this move to the upside with SPY ETF. Overall, the market now is testing this level. And the last couple of days, I've been talking to traders and subscribers that we've got this rising wedge, and rising wedges can be very, very deadly. They're highly volatile. A lot of times you'll get a great big pop in one direction and then you see it reverse and go the opposite. They're very good at faking and shaking the market out at an extreme level. And we're seeing that today. So let's move forward to today. Today, the equities markets have a big pop in price. All the things are coming together that I've been talking about over the last couple of weeks, where we've got this big move and we pierce this high. Everyone is super bullish and everyone's piling into the stock market today. We've got a ratio on the NYSE of the volume of 9 shares being bought on the ask to every 1 share being sold on the bid, and a ratio over 3 is bearish. So we are at 9. So this goes to show that everyone's running in the same direction, doing the same thing, and that should fizzle out over a few days, and we could see a very big reversal in the market. So now let's take a look at the next chart here. Look at here is the net short. I pulled this off Twitter. This is a net short on the SP 500 as of about a week and a half ago. Going forward, we have a record net short. We haven't seen a short position on the SP 500 this big since 2015, and the market really isn't going to crash until these shorts get negated and get back to start to move higher again. I mean, the market still crashed even when it was very short. It was still crashed in March, but overall, we need to see some of these probably get negated and people have some short covering, and that's what we're seeing today. Overall, today is that big bullish sentiment in the market. Everyone is piling in, and then if you look at the actual, where's the data here? Let me pull. If you look at the earnings this morning or the unemployment numbers, look at the data for more or less the U.S. at 8:30. Everything was, other than some minor little ones here, all the big points, all green, really strong numbers. You got to wonder if the system's being gamed here. They couldn't be much further off from the forecasted minus 8,000 to plus 2,500. Huge number. We're talking over 10,000 out of whack, minus 400 to plus 200. Like, these are super bullish numbers. I think these are put out. I just don't see how they can come up with such huge numbers out of spec, but everything is really bullish today. We're breaking resistance. Everyone is piling into the market, buying leverage to the upside, call options. Shorts are going to be covering. This is Friday, so if the market holds up into the closing bell or late afternoon, a lot of those shorts, that record short position I just showed you, they're going to start to cover because they do not want to be on the wrong side of this. People are losing a fortune on the short side of the market, and that is causing this move today, and it could end up being a very strong close for a record high gain for the day, if depending how it unwinds. Now take a look at the put call ratio. Take a look at this. So this is the total put call ratio, and it's based on an average of opening prices. This red line down here, I can probably zoom out even further, but anyway, this red line, we'll just stick to this time frame. This red line is a fairly significant level that whenever the price gets down here, we've seen a very significant top in the stock market. And what this is saying is this here was the February high. Everyone was buying call options. There was no fear in the market. VIX was low. And that signaled was part of a signal of the big sell-off coming into play. Well, here we are. Yesterday we were at this level. Today we are below that level where there is no fear. Everyone is buying options to the upside, expecting higher prices. They think that we're in a new bull market, and this is a big warning flag. And of course, we can see that in the VIX. You go to the VIX. I'll just go to the VIX on this chart. Take a look at the VIX. It's down almost 9% this morning. Continues to grind its way lower and just fade down. Again, fear is fading. And we're seeing the safe havens like bonds, precious metals, miners, they're all unwinding and selling off because everyone's moving out of the safe havens. They've given up on them and they're piling into the stock market, especially the small caps, the financials. I mean, those stocks are rocketing higher. And the reality is things are terrible. The technicals really aren't there other than prices trending. The underlying technicals aren't the strongest. Fundamentals are terrible. And this is really just a Fed-induced rally. And I think today and over the next couple of days is going to be a short squeeze to the upside, followed by, I think, huge selling. And we've been waiting for this for a long time. We're looking for a reversal pattern. We're looking to potentially get on a net short position on the SP 500 because I think it's got a lot of potential to the downside. This could unwind all the way down to a double dip. It could get a lot uglier. Who knows where it will really go. The key is we got a massive gap above resistance. We know gaps above resistance are bearish. All the other sentiment indicators are screaming this is an exhaustion move. Maybe it's going to run up and spike a little higher. We do have a big gap way up here still on the SPY. It could have this big blow off top and suck everyone into the long side. The shorts are going to get negated. They're all going to close out their shorts. And then we see this thing get crushed and slammed going forward. So it's going to be really interesting how the market can work itself up, get back up to these juicy levels, unload their positions, and then profit from a collapse, the big smart money. For all you know, this is getting walked up at the Fed. And there's going to be a lot of people taking advantage of this when it does blow off and start to reverse to the downside. Anyways, I want to just kind of show all those points because a lot of things are coming together. Today is an emotional day for most people. FOMO is at a max. Everyone has the fear of missing out of this rally, but really this type of move is what sucks everyone in right at the end of a trend, and then you see it reverse and you bought at the high. And so that's the type of move we are in at this point. And it may go higher, but keep in mind, over the next couple sessions, this could be a massive spike followed by a massive collapse and then a trend that goes much lower from here. So try not to get too emotional. This is just another day in the market. It's just a bigger percentage move. It's not the end of the world if you're not long. And of course, this is a high risk type of opportunity to be piling into the market here. Overall, the market is designed to pull money from you if you trade off emotions, and today is one of those emotional days in the market. Anyways, take care. Bye-bye.